My name is Nufel. Today let's learn how to write an answer for ethics question for ethics question in strategic business reporting exam. Now, this question is a compulsory question in the SBR exam. It's a compulsory question and it will be tested for 20 marks. And it is easy to score marks. And I usually say this is a bonus area. This is a bonus area. Okay. Before starting the question, if you have any doubts, please comment below. I will respond as soon as possible. And I have linked a model answer which I have written below. So after the explanation, you can just check that answer on how to structure. Okay, now let's start. Whenever you go to the exam, the first thing you should consider is the requirement, because already know that this question is compulsory. So the requirement clearly states is discuss the ethical and accounting implication. Now see, ethical and accounting implication. Ethical is a separate question and accounting is a separate question. And they're clearly mentioning implication. Therefore, students, please be careful. Do not copy paste. Do not copy paste the scenario in the exam. Do not copy paste the scenario in the exam. As a strategic business reporter, strategy in something future. Strategy means something future. You should be able to explain the future problems that will be as a result of the accounting treatment mentioned above. And then you need to give a solution. From the perspective of an accountant, again be careful, it's a perspective of an accountant. So you need to be very much careful when you're writing the answer. Again, students, I'm repeating, you should not copy paste the scenario. You should think what will happen as a result of the accounting treatment mentioned above, and then you should mention the solution. So I will write down a small flow chart that makes you easy. Initially, you should state the accounting standard initially, or state the ethical issue initially, the ethical principle like lack of objectivity, lack of professional competence, lack of due care. You can mention something like that, professional competence or due care. Okay, now students, first thing is state what is the issue. State means what, and then you need to apply means you should tell the implication, the impact of what will happen as a result of this. Now if I am going to say as a result of this, I can say why is the problem, so you should tell what can happen, and you need to connect the stakeholders, and the primary stakeholders you need to connect first is the investors and the lenders and other creditors. Please keep this in mind. These are the three major people who are worried about the company's finance. And then you can tell about other people. And then state, apply, and conclude. Conclude is where you should give the solution. And students usually make a lot of mistake. I just need to correct it. That is, they state the problem very well and they directly come to the conclusion. So this is the area where they are losing a lot of marks. And the average marks usually in the SBR exam is from 50 to 60. The main reason, students are very thorough with the knowledge, but very thorough with the solution. But the problem is they are not able to explain the impact in a business scenario. So students, in SBR exam, you need to be very clear that you are going through the implication in the point of the company. Now students, if you look at the point of the company, here the company is Abby. So I will write in here with a different color pen, so it will be easy for you as Abby. Abby is the name of the company. So please be very careful. Again, I am repeating students, it is state, apply and conclude. State, apply and conclude. Please remember. Okay, students. Now what we'll be doing is we will just go through the question, and I told you again, discuss. That means it's not about stating the impacts of this, the ethical and accounting issues. Students, please be very careful. This is SBR exam, and students, you can write it in any order, but I prefer that you need to start with accounting issues first and then ethical issue, because it will be easy for you when you are writing, because without accounting issue, it's very difficult to identify the ethical issue. And again, think in the perspective of accountant. That means for the accountant, what is the problem? Don't think about the other parties. Again, I'm repeating, in the perspective of accountant. In the exam, students, this perspective is the area where exam can change the entire question answer. Instead of mentioning accountant, he can say someone else. In the perspective of investors, in the perspective of lenders, in the perspective of directors, in the perspective of management. So please be careful with those areas. Okay, students, now let's start working on this. Abby is a company which conducts business in several parts of the world. Several parts of the world, it means it's an MNC. MNC means multinational company. A related party transaction, that means IAS 24. IAS 24. But students, in the old P2 exam, you can directly recall what is the issue and directly start writing IAS 24. But in this, you should be very careful. They may give you one standard, but the requirement will be for another standard. So be careful with that. The accountant, that is you, has discovered the finance director of Happy has purchased goods from a company, White, which is the director jointly owns with his wife, and the accountant believes that the purchase should be disclosed. So as a student, what I need to think is in the perspective of accountant, whether he is right or wrong. Actually, I think it is very right. So I put a tick here. So it is correct. It is correct. According to IAS 24, this must be disclosed. Just be specific to Abby. However, now the problem starts here. The director refuses to disclose the transaction, as in his opinion, it was an arm's length transaction. He feels that this transaction is disclosed, it will be harmful to the business, and feel the information asymmetry clause by non-disclosure is irrelevant, as most entities undertake related party transaction without disclosing them. Now here he is clearly mentioning his justification for his action, Please be careful with that, students. Now, similarly, they have mentioned, means this is another trigger. So initially, if I was in your position, I will plan. The first thing I will be planning is I need to identify accounting problems and ethical problem. And the total marks given is 18 marks. So I will just think 9 marks for accounting, 9 marks for ethical. This is in the point of a student. In the marking scheme, it may vary, but I'm thinking in a point of a student. So the accounting problem here is IAS 24, the related party transaction, which should be disclosed. That is correct. And the ethical issue, I can say, is lack of objectivity by the director. Please be careful, it's by the director. But I am asking you a question. The next question is lack of competence also. I think the director is unaware about the IAS 24 standard also. Please keep that in mind. And my question here, do you need to think in the point of finance director or in the point of accountant? And there comes the trigger, I'll write accountant. So for accountant, what is the problem? If he is agreeing with finance director, not the finance director, because it's very straightforward. Finance director is having lack of objectivity, but for the accountant, what will be the issue if he is going with the finance director integrity? because the integrity is lack of integrity if he is accepting it. And also I can say again it's competence also, professional competence also. You need to explain why the accountant will not have professional competence if he is following the finance director. And also you can mention objectivity, but usually it should be case specific. Please keep that in mind, it should be case specific. Now students, if I was in your position, I need to write the answers as soon as possible. So students, I will be directly stating IAS 24 disclosure. IAS 24 disclosure for transaction with Abby. For transaction with Abby. IAS 24 disclosure with transaction with Abby. Now, what I'm going to mention here is IAS 24, a state point. I will clearly say that in accordance with IAS 24, related party transaction must be disclosed. Related party transaction must be disclosed when key managerial, look at the verb I'm using, key managerial personnels are getting involved. Personnels are getting involved. Please be careful here. Key managerial personnels are getting involved. Okay. Now students, this is the state point where I would have scored some marks. Now see the word count here, just writing the heading, and this totally 26 words are already there. So when you're writing in the script, again I have uploaded the script in the link so you can check this. Okay. Now what I'm going to do is I have just stated the problem. So I'm going to apply to the scenario. I need to mention the finance director of Abby. The finance director of Abby should disclose, the finance director of Abby should disclose the related party transaction with his wife. Now see students, this is just stating whatever that is there in the case. Now this is how you score marks, because he is a key managerial personnel. He is a key managerial personnel of Abby, and his wife is a family member. Now see, I have scored some marks. Now I am going to come to the implication. What if they have not mentioned this? If the transaction is not mentioned, I can say disclosed, it is not true and fair. And it will breach the enhancing quality of financial statements, and also the fundamental characteristic or the fundamental quality which is faithful representation. Please keep that in mind. This is how you will be scoring marks for the ethics section. And I need to mention here solution. So therefore the finance director is incorrect. You should mention this clearly. The finance director is incorrect, and he should disclose in the financial statement. Please keep this in mind, students. Very important thing. Now I can mention here another subheading as ethical implication, ethical implication and policy, ethical implication and policy, ethical implication and policy. Now let's go through this ethical implication and policy. Now it's very clear we should think in the point of the accountant. If the accountant follows the guidance of the finance director, he may be questioned in the future. He may be questioned in the future. Meaning, he may be under investigation too. He may be under investigation too. And sometimes he may lose his job. He may lose his job. Therefore, the accountant should clearly explain the correct accounting treatment to the finance director, and he should suggest the issues involving in the future, and also if he cannot convince the director, he should bring this issue to other directors. With sufficient evidence. Now students, if you look at the answer, now just I have gone through one trigger and totally it's having 173 words. Please keep that in mind. It's having 173 words in total. Just one issue. Now students, if you look at the answer what I was explaining here, I was giving you mostly the implication. If the transaction is not mentioned, what will happen? True and fair view, there will be an issue because they have already done the accounts here. So there won't be an impact in the financial statement, but there will be an impact in the credibility. So please be careful with that. Now students, I'll just go through the next one. Similarly, the directors felt that the competitive harm would occur if the disclosure of operating segments profit or loss was made. Competitive harm means the harm that can be caused due to your competitors. In other words, the competitors may know your personal information. As a result, the entity only disclosed measure of total assets and total liability for each reportable segment. Please keep that in mind, students. This is a current issue. Of IFRS 8. What the director says is fair, but according to the standard, we should follow the standard. But what is the director telling is 100% fair because competitors can copy this. So students, again, you should write an answer which is mostly on a strategic perspective, and then you should conclude in the accounting standard. So again, I will be explaining on how to write this IFRS 8. So I'll write down. Before that, I'll just update the plan here. Now see students, I am not reading the entire question. I am reading the issues by issues, because in the exam when you read the entire question you will be losing a lot of time in the examination, and sometimes when you come to the end you will be confused what was the first issue. So please do in the exam issue by issue, which will be easily making you to score the marks and helping you to save a lot of time. So students, I am writing here as IFRS 8. IFRS 8, and I'll write below this competitive harm. And one more thing students, look at my answers. Most of the answers are very straight. But if you look at the P2 examination, the answers what the students were writing were mostly technical. But here the answers what I'm writing is mostly relevant to the case study and mostly strategy oriented. That's what I'm telling you. The implications is more important when you're writing the answers. Now IFRS 8 competitive harm. I'm writing here competitive harm. So please be careful here what I'm going to mention. So competitive harm, it makes strategic sense. But students, we need to follow the IFRS 8. And here, if you look at the ethical issue, it's not a serious issue, but still I can say it is professional behavior. At the end of the day, you should follow the rules and regulation. It's professional behavior. So as an accountant, don't tell the finance director is having lack of professional behavior, because the question clearly specifies, look at the verb I am using, the question clearly specifies that you are in the perspective of an accountant. You are in the perspective of an accountant. So students, what I am going to write here? I am going to write here IFRS 8 non-disclosure. Look at the heading how I am structuring. Non-disclosure of profits. Non-disclosure of profits to non-disclosure of profits in the financial statements, of which company? It is Abbey. In other words, I am being very specific to the company, and I am thinking that I am an accountant in this company. I am the accountant. That's what I am mentioning specifically. So I'll directly start with IFRS 8 clearly states. Now look at the verb. I am not starting IFRS 8 as operating segment is a component of an entity which involves in earning revenue and incurring cost. I'm not mentioning anything. I'm clearly saying IFRS 8 clearly states that a reportable segment should disclose the total revenue and profits and assets or liabilities in each reporting segment, in each reportable segment. Students, don't worry about this typing, because already I have attached the answer in my own handwriting, so you can go through the link, but just understand the concept clearly. So now I have completed with the state point where I will be scoring a little bit of marks, but I am going to explain the implication. So I will be careful. As per the director, he is correct. Now see, in the previous one I said he is incorrect, but here he is correct in the perspective of financial risk. Please be careful. In the perspective of financial risk of competitive harm, that is, the competitors can copy. However, it is a rule to follow the accounting standards. It's the rule to follow the accounting standards. Therefore, the disclosure is necessary. But this is a current issue. Which must be amended in the future. Because it's 100% correct, it must be amended in the future because of the strategic risk. You agree with me? Yes or no? Therefore, for reporting perspective, therefore, for reporting perspective, this must be included. This must be included. Please keep that in mind, students. For reporting perspective, this must be included. So I'm going to write here ethical issue, ethical implication as a subheading, ethical implication. Now, what is the ethical implication here? You think in the point of accountant. If the accountant, I'll just make it clear. If the accountant agrees with finance director, he is strategically correct. Strategically, he is correct. However, reporting perspective, he is incorrect, and will result in lack of professional behavior, Please keep that in mind, students. Therefore, this information must be disclosed. This information must be disclosed. And if this is not disclosed, there will be accountability issues raised by the investors during the AGM. Students, again see annual general meeting. Again see, students, I'm just writing an answer in the point of a student. It's not the best answer or it's not the perfect answer, but this is how you should be prepared in the examination in order to pass the exam. Okay. Now, students, I'll just go through the next one also. When preparing the financial statement for the recent year, the accountant noticed Arvite has not paid the invoice for several million dollars. So I can see this term as materiality. What is that? Materiality. Strategic impact is there. And it is significant overdue for the payment. It appears that the entity has a liquidity problem and it is unlikely that Arvite will pay the money. So there is an issue of bad debt. I can write here as bad debt. The accountant believes that the loss allowance for trade receivables is required, and I agree with the accountant. The finance director has refused to make such allowance and has told the accountant that this issue must not be discussed with anyone within the trade because of possible repercussion for credit worthiness of Arvite. So here there is a self-interest threat of director. Please be careful. He is protecting his own company, which he has the stake with his own wife. But practically it's an ethical issue. It's lack of integrity from the finance director. But if you are going towards them, again, as an accountant, you are losing the integrity also. Why did you accept the finance director will be a question by the auditors. So you need to be very careful in the point of accountant. And students, this is a standard IFRS 9 financial instrument. You have two things called expected loss model and one thing called incurred loss model. So I will write the next accounting one as IFRS 9, which is financial instrument receivables. So I can mention here expected loss model. So the accountant is correct. You should apply this. And the implication here, he has not disclosed it. So the problem is going to start in the point of accounts also. So the profitability will be high. Yes or no? The profits will be high. If the profits will be high, what happens? The EPS will be high. In other words, this I can say as a creative accounting. But in the previous things, They are not disclosing the notes, but here they are not disclosing the numbers. If the numbers are not disclosed, there will be a problem in the analysis of the measurement of the performance. So please be careful. This is a very serious issue, very serious issue, and the implication must be clearly mentioned. The implication must be, the trade receivable balance will be overstated, yes or no? The trade receivable balance will be overstated. In other words, current ratios, the current ratio also will be overstated. Now students, see, I'm just connecting some knowledge of performance measurement which will be giving you some marks in order to score the ENOX exam. So it's not so difficult here. So students, I will just do the structuring for you all, so it will be easier when you are doing. So I will be writing here as IFRS 9. IFRS 9, which is financial, or I can say IFRS 9 loss, expected loss for R white, that is the name, receivable, R white receivable is not disclosed, it's not disclosed, it's not disclosed. Please keep that in mind. And not accounted, please keep that in mind. So initially I need to start with what, students? State means the standard. What does the standard say? Now see, I'm not writing in detail the standard, I'm just being very frankly telling the points like a strategic business reporter. I'm saying IFRS 9 states that a loss allowance must be created if there is a risk of bad and doubtful debt. If there is a risk of bad and doubtful debt, the technique used is expected loss method. The technique used is expected loss method. R white. Sorry. Now I am coming. The finance director is incorrect. I am directly saying the finance director is incorrect in his view to not disclose the risk of customer repayment. It is clearly a creative accounting. Please keep that in mind, student. It's clearly a creative accounting. Just keep that in mind, students. The impact will be high because, now see, I'm using the term because, the trade receivables will be overstated. And the profits will be overstated. Which may give false analysis to the investors. Now I'm connecting that to the investors, and the amount is material, and this is a deliberate error. Instead of using, I said deliberate omission. Deliberate means you are doing it intentionally. Deliberate omission. Please keep that in mind, students. Deliberate omission. Therefore, the loss allowance must be created. The loss allowance must be created. Must be created in accordance with prudence convention. In accordance with prudence convention. Now see, I am connecting a basic knowledge. Prudence convention. In accordance with prudence convention. In accordance with prudence convention. In accordance with prudence convention. Again, students, I'll just come here to the next one, the ethical issue. What issue here? The ethical issue. Now, if you look at the ethical issue here, the ethical issue here, I'm going to clearly mention the ethical issue is going to be, the ethical issue is going to be, the ethical issue is going to be that the company is facing a risk of stewardship function. Correct or not correct? The ethical issue here. I'm going to just continue with that. The ethical issue is the accountant should act with objectivity. The accountant should act with objectivity. The accountant should act with objectivity. And there should be proper communication. There should be proper communication and avoid biasness. Avoid biasness. I can clearly mention that the entity should conduct an internal audit. The entity should conduct an internal audit. I'm just summarizing these points because I have already given the answers in the link below. So the next thing what I'm going to do is the subsidiary fair value adjustment. Now, if you look at the subsidiary fair value adjustment, again, it's IFRS 3 business combination. Please keep that in mind, it is IFRS 3. Additionally, when completing consolidated financial statement, the director has suggested there should be no positive fair value adjustment for a recently acquired subsidiary. Okay, so he has suggested that, but actually is he correct? Actually, again, he is wrong. The director is wrong and has stated that the accountant's current position is dependent upon following this. So I can say he is threatening him, and this threatening him is only known as intimidation threat. Intimidation threat. The fair value of subsidiary is 50 million above the carrying amount in the financial statement. 50 million above. The reason given for not fair valuing subsidiaries net asset is that goodwill is an arbitrary calculation which is meaningless in the context of performance evaluation of an entity. So again, he is telling it will not affect the ratios. Now let's do a small evaluation here. Just do a small evaluation here. Now if you look at the evaluation, listen carefully. Again, the issue here is IFRS 3 business combination. And if you look at the ethical problem here, it's again a threatening. So I can say is intimidating. Is intimidating. So I will explain that later. Now, if it's IFRS 3, fair value is not mentioned. Okay, fair value of 50 million. So you should mention this figure in the answer. So if this 50 million is not mentioned, the goodwill will be high. The goodwill will be high. I have given the explanation clearly in my writing. The goodwill will be high. If the goodwill is high, again the assets will be overstated. Please keep that in mind. The assets will be overstated. Another problem is if there is a fair value adjustment, and suppose if it is a non-current asset such as a building, example such as a building, the problem will happen is there will be excess depreciation. There will be excess depreciation. If there is excess depreciation, then there is a problem. There is a problem. If there is excess depreciation, then there is a problem. That is, the future profits will be less. If you record this, the future profit will be less. So if the future profits are less, the EPS also will be going down. So again, this is an earnings management technique where he is trying to increase the EPS to attract the investors. To increase the EPS to attract the investors. So please keep that in mind. You should clearly start it according to IFRS 3 and just mention a small sentence. IFRS 3 clearly mentions that there should be assets valued at fair value of net assets and fair value of investment. The difference between that gives you the goodwill calculation. So here the fair value adjustment is ignored, which is incorrect. Therefore, this should be added back. And if it is added back, these are the things that will happen. In other words, the EPS will come down, the assets will be understated. In other words, it will be showing true and fair view. And also you should say the other way around also. If it is not accounted, what will happen? The EPS will go up. So both the way you should explain. And then the next heading will be the ethical issue. You can say the finance director is intimidating the accountant. You need to mention that clearly, and you need to tell some technique. He should collect evidences, he should bring in light to the other directors, and there should be a whistleblower. And also he can ask advice. You please write it down, advice from ACCA. He should report this to ACCA. And one thing you should keep in mind, suppose if there is no solution at the end, the last resort should be resign the job. Last resort should be resign the job. Students, again, you can check the answers for how to structure this. I have clearly mentioned. Students, now what I'm going to do is I'm going to do the goodwill impairment calculation. Finally, when preparing annual impairment test or goodwill arising, now see IAS 36 comes here. On other subsidiaries, the director has suggested the accountant is flexible in assumption used in calculating future expected cash flow. Assumption used in expecting future expected cash flows, so that no impairment of goodwill arises. So here it's profit smoothing. Again, he is trying to be flexible there. And the accountant should use a discount rate which reflects risk for which future cash flow has been adjusted. He has indicated that he will support the salary increase to the accountant if he follows this. So here he is giving some incentive. In other words, if the accountant accepts it. So I will just start doing the planning for you all, so it will be easy for you. So here, even though it's goodwill impairment, it's going with a standard called IAS 36 impairment loss. So you need to clearly mention that value in use is the present value. I'm starting directly with value in use. So you will be getting some marks directly. It's the present value of future cash flows that are being expected from an asset and which is being discounted at pre-tax. It is pre-tax risk specific cost of capital, and also it's better to mention a little bit of explanation of recoverable amount. And again, you see the director here is trying to manipulate the financial statement. Again, you need to explain the impact. For example, if the impairment is less, the profits will go up. The impairment is less, profits will go up, and you should explain that clearly on how there will be an impact there. And students, the ethical implication, I can write it here. I can say this is a self-interest threat for the accountant, to accept this. You should not write about the finance director. You should think in the perspective of yourself. And again, you can write some points on how to give a solution and what are the impacts of achieving a higher salary in the future. Because if there is a good corporate governance, I'm using the term corporate governance, there will be an issue for the point of accountant. So students, I believe that you are clear with this, and thank you very much for watching this video, and I believe that it will help you to pass the examination. Good luck for all students, and please let me know if you have any problems. Thank you.